In today's video, the stock market today is currently bleeding. What should you do next? Next up, there's a new meme stock in town and it's called Newegg. Should you still be buying at these prices? Also, China is currently cracking down on stocks that trade on the US exchanges. Why are they doing this? And lastly, Didi Stock has been the talk of the town. But based on what China is doing, should you still buy the stock? Let's find out. Welcome back everyone, I'm your host Edward, and oh my god, today is a very bloody day for the stock market and the crypto markets. But today I'm mainly gonna talk about stocks because yesterday I only talked about, Bitcoin and crypto. And for those that are new here on this channel, I talk about stocks and crypto news. So if that's something you're interested in, feel free to subscribe and hit that like button down below for the YouTube algorithm. And yeah, without further ado, let's dive right in. So as usual, I'm just gonna go through the markets and we can see that the Dow Jones, S&P, and the Nasdaq are down about 1.3%, and the reason why the stock market is down is due to the weekly jobless claims, and yeah, it seems to be rising. Not only that, there's also the Delta variant that a lot of people are scared of, and right now there's a lot of uncertainty with this variant and whether it's gonna bring the country back into a lockdown. But yeah, please don't panic. I believe this is just all noise. And we head on to VinViz, right? For the heat map, we can see that majority of the sectors are down today. So yeah, in my opinion, today is a great sale day. Now if we head on to the crypto market, Bitcoin is also down, and usually when the equity markets are down, Bitcoin also follows the lead. And right now I'm not surprised at all, but it is what it is, especially when it's a risky asset. I'm not surprised that it got dumped heavier than the stock market. But the first main article that I want to talk about today is Newegg Stock, because yesterday the shares soared about 148%. And yeah, pretty much this is the current meme stock, and we can see that trading volumes reached about 75 million shares, which is pretty crazy in my opinion. And Newegg isn't a bad business in my opinion because they sell a lot of GPUs and CPUs, which are really high in demand at the moment. Some people probably shorted this stock due to the low shortage of semiconductors, and there's a lot of supply chain issues at the moment. But this stock was literally only 10 bucks a share, and now it's worth about $50 a share, and I think the highest it reached was about $70. So obviously my first instinct is to go on to wallstreetbets and see what people are talking about. And this user here, right, it got a lot of upvotes, so that's why I kind of read it. And he's kind of warning everyone not to buy it after it spikes about 500% in a week, and I do agree. He's just warning people that you're gonna lose when it sells off, blah blah blah. And not only that, he also went through the fundamentals, which I really like, and he said that it's worth more than $22 billion right now, bigger than a hedge fund, a Toyota, and Delta. But when I scroll down, I do agree with this comment by this user saying like something doesn't seem right about this one because it came out of nowhere. And when I read this, I have two thoughts. So my first reason is either a lot of users kind of just hopped onto the stock, and my second reason is that hedge funds are kind of borrowing money at a really low interest rate and kind of screwing around with wallstreetbets. And I don't think the short ratio was that high either, so I'm not sure why this stock kind of just pumped out of nowhere. So yeah, I see a lot of users kind of agreeing with it and saying this did come out of nowhere. But yeah, in the end, congratulations to anyone that bought Newegg stock. But yeah, just make sure to have an exit strategy when it comes to these types of investments. And yeah, that's just my 2 cents on it. So the second main article I really want to talk about today is China cracking down on stocks that trade on the US exchange. And I kind of went through the article, and pretty much China is very worried that these tech companies that are trading in the US exchanges are kind of leaking data to the US so that they'll have information on their citizens. And knowing China, they don't like that. That's why Facebook, Google, and all these other companies are banned in China, because they do collect information on their people, which is why a lot of Chinese stocks are down today. And for those that don't know what ADRs are, just think of it as foreign investments. And right now we can see that this China ETF by Investco is down a lot. And personally, I don't like Chinese stocks due to their accounting practices, and Luckin Coffee is probably one of the best examples. And a lot of US investors kind of lost their money on it, and it just sucks that the US can't audit their accounting work, so we don't know if they're actually faking their numbers, right? But the only time you'll see me buy Chinese stock would be a China ETF like this, but I currently don't have any plans to, maybe in the future. But yeah, we can just see that China is just building a huge entire wall around their country and not letting anyone have data on them. But yeah, there's just the CCP doing their own thing, but in the end I do find this as a little bit of noise. But yeah, I think people should should focus more on the fundamentals. And if you're investing in Chinese stocks, just know that the government is like the referee, right? And what the referee does is to, manage the playfield and make sure, nothing sketchy is going on and making sure everything is fair. And in China's case, I feel like, their referees are playing the game, like they're in the game and making the rules. So that's my take on it, which is a great transition to my next article, which is about Didi Stock. And, for those that don't know this company, they are essentially a mobility company like Uber. And I pulled up their F1 filing to kind of show you everything. So they have about, 493 million users, 15 million active drivers, and they're located in about 15 countries. And if we go here, we kind of see their, income statement. And I always like to look at their revenue, and we can see that they actually lost a little bit of revenue from 2019 to 2020, most likely due to the pandemic. And they're currently not profitable at all, but I'm not surprised because this is a growth company. And I don't think a lot of ride-sharing businesses are profitable, like even Uber isn't and Lyft. But the critical point in this article is that China announced that Didi cannot add any more users on their platform, and the Didi app was taken down from all the app stores in China, mainly because of how Didi handles, their customers' information. I think that some of their data was actually given to the US, which is why China is currently cracking down on tech stocks. And yeah, it seems like Chinese regulators were probing Didi for antitrust violations. So Winnie the Pooh is pissed off, and I'm not surprised. But if they're not able to add any more users on the Didi app, then I don't think there's a really great reason to own this stock or this business, because revenues are super important, especially growth stocks. Not only that, Uber owned about 15% of Didi, but I think when they went IPO, they sold about 3% of their stake, so now they only hold 12% of the company. And I think Didi probably shared a lot of info to Uber, and obviously China didn't like that. But I also found an article here from wallstreetbets and how this was all planned out to take, $13 billion of cash from American investors. I mean, this is a really great theory, and I don't deny it because Chinese stocks are very sketchy. And he's just saying that this was pretty much all planned, and then suddenly right after their IPO, the CCP decides to crack down on them. I mean, I don't take it off the table, but I thought this was pretty interesting. So next on the article, this is a stock that I do like, and it seems like Beyond Meat is launching a new meat-free chicken tender in US restaurants, and it seems like they're gonna be debuting this to 400 US restaurants on Thursday. Now, I did do a whole video on Beyond Meat, so I'm not gonna dive too deep into it, but I love their mission. I love the CEO and founder. So the only downside that I see with Beyond Meat is that they're too expensive and it doesn't taste as good as, regular meat. And if they solve these two issues, I feel like this stock is gonna be worth way more than it is right now. And this company is constantly innovating inside their company. Right now, they focus on trying to, disrupt their own products. So they're constantly making their food better. I don't think a lot of consumers like that unless, they're vegetarian. Oh, not only that, they have to make their food even healthier because based on my research, there's a lot of sodium in it and it's highly processed, so it might not be, healthier than regular meat. So these are problems that I see with the company, but that doesn't mean that I'm not comfortable holding this stock because I do love their mission, their growth, and the CEO. Now lastly, just wanted to get into some personal finance news, and I don't have a subscription for the Wall Street Journal, but this article is saying that there's a lot of struggles with millennials trying to find a new home, and I don't disagree because I am a millennial myself. But if you think about it, home prices are rising faster than wages, and a lot of people are in debt and aren't financially literate, which is why no one's able to kind of own a home and they would rather rent instead. And 2 days ago, I did make a hot take and said that I think people would rather live in RVs in the future, especially when everyone's working from home now. So I think that RV stocks are going to be probably a big thing in the next decade. And right now there's a shortage of homes, and whatever's on the market, it just gets swooped up immediately by either hedge funds or, real estate investors. But yeah, there's basic economics, right? There's less supply and there's more demand, which drives the price up. But yeah, this is reminding me of 2005. So could Michael J. Berry actually be correct? And I think a lot of, hedge funds and big companies are buying up real estate because they want cash flow. And using that cash flow, they can kind of, use that money and invest it somewhere else. And obviously, homes are probably one of the best cash flow assets out there. So that's my take on it. So lastly, not gonna go too deep into this, but this is another personal finance article. And yeah, it's just saying that master's degrees don't really pay off. And I kind of do agree, depending what kind of field you're in, right? And in this case, we're talking about a filmmaker here. And right now, most of the people coming out of this type of program are making 30K a year. And if you do the math here, that's gonna take you like 5 years to pay off, especially with interest, maybe even 7 years, right? But yeah, it just sucks. And I personally went to uni. I think it's a waste of money. And personally, I think with the power of the internet, I think anyone can make money online. And I think that anyone considering going to uni are pretty much there to kind of make connections and have that social life. But other than that, I don't think you're learning much. And I think that people learn way more than going on Google and YouTube than going to a uni. That's my hot take. Obviously, just my opinion. I know a lot of people won't agree with it, but that's that. That wraps up for this video. If you're interested in buying crypto, please head into my referral links in the description box down below, and we can both get a small cash bonus once you sign up and make some trades. If you enjoyed this video, please smash that like button down below for the YouTube algorithm. And if you haven't already, feel free to subscribe and also hit that notification bell so you can see my videos every single week. That's pretty much it, and I'll see you all in the next one. Peace.